Imagine waking up tomorrow only to find that every dollar in your bank account is nothing more than a useless number, that the bank where you kept a lifetime of savings simply ceased to exist overnight. In 2008, the world didn't just come close to financial crisis. It reached the edge of a total collapse of modern civilization. While millions of families were being evicted from their homes and thrown onto the streets, the architects of this disaster were sipping champagne in luxury penthouses in New York. This isn't just a story about economics. It's the story of the greatest fraud ever committed against humanity, where the greed of a few destroyed the future of billions. Get ready to understand how Wall Street's house of cards collapsed and why. In the end, the villains walked away with their pockets full while the rest of the world burned. It all started with a seductive lie called the American Dream. In the early 2000s, the biggest banks in the United States discovered a dangerous gold mine: subprime mortgages. The idea was simple and deadly: lend massive amounts of money to people who clearly could not pay it back. They lent to people with no jobs, no income, and no assets. For the banks, it didn't matter if the loan was rotten, because they took those debts, bundled them into complex financial products, and sold them to the rest of the world as if they were investments as safe as gold. The credit rating agencies, which were supposed to protect the public, were paid millions to stamp these trash assets with the highest safety ratings. It was a perfect crime, disguised as sophisticated mathematics. As the housing market climbed higher and higher, the arrogance on Wall Street reached divine levels. Brokers were earning million-dollar bonuses for selling papers they knew were garbage. They created a bubble so gigantic that the air began to grow thin. But bubbles have an unchangeable physical characteristic: they always burst. In 2007, the first cracks appeared. People started falling behind on their house payments. Suddenly, those safe investments that banks all over the world had bought became toxic. The global financial system is like an iron chain. When one high-tension link breaks, the entire structure lashes back with devastating force. The peak of the terror happened in September 2008, with the fall of the giant Lehman Brothers. Imagine a bank with more than 150 years of history, with $600 billion in assets, declaring bankruptcy on a Monday morning. The panic was instantaneous. The credit market, which is the oxygen of the world economy, simply stopped breathing. Banks stopped lending to one another because no one knew who would be the next to die. In a matter of hours, ATMs in several countries threatened to stop working. The system that keeps food on supermarket shelves and fuel at gas stations was minutes away from a total blackout. It was the most dangerous moment in modern history since World War II. But this is where the story stops being a natural disaster and becomes an epic injustice. To prevent the world from returning to the dark ages, governments decided to intervene. But they didn't save the families who were losing their homes. They saved the banks that caused the problem. Trillions of dollars from the taxes of ordinary citizens were injected directly into the accounts of the very institutions that created the fraud. The argument was that these banks were too big to fail. While the average citizen lost their job, their retirement, and their roof, Wall Street executives used the public bailout money to pay themselves performance bonuses. Almost no one went to prison. The system was fixed with the sweat of those who were not to blame, so that the guilty could keep playing. The scars of 2008 have never truly healed. The global middle class was devastated, and trust in institutions was destroyed forever. This event gave rise to protest movements around the globe, to the creation of Bitcoin as an alternative to the corrupt banking system, and to a political polarization that defines our world today. We learned the hard way that in the Wall Street casino, the banks play with our money. If they win, they keep the profit. If they lose, we pay the bill. The 2008 crisis was a brutal reminder that the financial system is not an exact science, but an engine driven by trust, and that in the wrong hands, that trust could be used to architect the largest transfer of wealth in history, leaving behind a trail of destruction that we are still trying to clean up.